Good day, my name is Yolandi Esterhuizen and I'm the Legislation Manager at Sage VIP. The Employment Tax Incentive Act was promulgated on the 18th of December 2013 and it's effective as from the 1st of January 2014. The purpose of the Act is to incentivize employers for employing the youth of South Africa. The incentive that will calculate for qualifying employees, you can basically go and deduct from the pay-as-you-earn liability that you have to pay over to SARS. So this means you'll just pay a reduced pay-as-you-earn liability over to SARS, making without any effect on the employee. You first have to determine whether you are an eligible employer. Now, an eligible employer for the employment tax incentive purposes is a private sector employer who is registered for pay-as-you-earn. No public entity, government employer, or municipality will be an eligible employer, which means that they will never be able to claim these incentive amounts. You also have to determine whether you employ qualifying employees. A qualifying employee is an employee who is 18 to 29 years of age, who has a valid SA ID or asylum seeker permit, who was employed on or after the 1st of October 2013. And this employee should also earn at least the minimum wage as specified by your bargaining council agreement, sectoral determination, or collective agreement. If the employee earns at least the minimum wage, then the employee should also not earn more than 6,000 Rand a month to qualify for the incentive amount. No domestic workers or connected persons in relation to the employer will be taken into account for calculation of the incentives. What you have to remember is if you set this up on VIP as from January, the incentive amounts will calculate from January. But if you only set it up as from February or a later period, it will not backdate on the system. So once you set it up, that is the period from when it will be calculated. Now we'll show you the 3 steps to set it up on VIP. We're going to have a look at the basic company information screen, how to set up your definitions, and we'll also have a look at the employee tax incentive screen to make sure your system is set up correctly. To go to the basic company information screen, we'll click on Company, Basic Company Information. Then you'll click on the tab Employment Tax Incentive. I'll explain to you all the fields, but please make sure that you do read through all the release notes as it contains more detail. The first field, Exclude Company. If you select this field, ETI will never be calculated for this company. This would typically be used for public sector employers or government employers, or if you're a municipality. Company eligible. Now this field should be ticked if the system should calculate these incentive amounts. The field should not be ticked, or the field should be unticked if you are not tax compliant in a specific period. Tax compliant, meaning if you have any tax returns outstanding by the end of the month or any outstanding tax debt, then the system should not calculate ETI amounts for you. So make sure that you untick the field, but once you're tax compliant again, you can go and tick the field and the system will continue to calculate the incentive amounts. Leave pay allocation. At this stage, this field should not be used. SIC code is Standard Industrial Classification Code. Now this is a code to indicate in which industry your company is in. If I click on the field next to SIC code, you have to select from the list of codes the applicable industry. For example, manufacturing, if I click on it, it will bring up a list of codes. Please make sure that you select the 5-digit code. This is version 7 as provided by SARS, and version 7 is the list of codes that we're supposed to use. If you're not 100% sure which one to select, please make sure to visit Stats SA, or you can read our frequently asked questions document that contains a link to a guide that will explain all these SIC codes in detail. Special Economic Zone is the next field. Now, if an employee is linked to a special economic zone later on, then the age restriction will not be applied, which means employers can claim an incentive amount for any employee of any age if they qualify or comply with all the other conditions. Please note that currently there's no special economic zone promulgated in a gazette as yet, so for now this field should not be used until further notice. The next field is wage components. This is extremely important. The wage components are used basically to compare this to your minimum wage. Now remember I said that one of the qualifying criteria is basically if an employee earns at least the minimum wage according to your bargaining council agreement, collective agreement, or sectoral determination. The system will use the wage lines that you set up to compare to the employee's actual wage to determine whether he earns the minimum wage at least. So on this screen, or in this field, we should indicate what makes up the basic wage of an employee. Now this would typically be in a salaries company, it would just be your salary. Now the definition of basic wage in the Basic Conditions of Employment Act is the amount of money paid to the employee for ordinary hours of work. So salary would typically be for ordinary hours of work. If you think about overtime, bonuses, commission, that will never be for ordinary hours of work. That is over and above my ordinary hours of work. So in a salaries company again, it will typically be your salary. If you have a wages company, it would be your normal wage line. If your normal wage is split into different lines on the system, for example, you split your normal wage and your sick pay, please indicate all relevant lines. So whatever makes up your basic wage, that is what you need to indicate. In a package structure company, you can include your cash as basic wage, and if you have an allowance that is for ordinary hours of work, you can also include that line. So the lines will be compared to the employee's actual wage to determine whether he's qualifying. If I've set up this screen, I can then go to define my minimum wages, because the system needs to compare the actual wage to the minimum wage. For that, we go to Payroll, Definitions, System Description Codes, and ETI codes. Now you'll see that there's a minimum wage field on the left-hand side, and there's already a default basic minimum wage. If my employee, if no bargaining council agreement, sectoral determination, or collective agreement is applicable, then the employee should at least earn 2,000 Rand per month. So this field is the minimum 2,000 Rand per month, which should then be linked to those employees not affiliated to a wage regulating measure. We can add our other minimum wages. For example, if I'm going to click on add, let's say I have a cleaner. And the minimum wage for a cleaner, for example, is 1,500 Rand, and I can add that. Say, for example, according to my agreement or my bargaining council, I also have a clerk, and the minimum wage of a clerk is, for example, 4,000. So you'll have to set up all these minimum wages so that then later on we can go and link each individual employee to a minimum wage. Now we can go to step number 3. If we go to step number 3, this is where we have to set up our employee ETI screens. If we go to Employee, Change Employee, I select my employee, and then I click on the Employment Tax Incentive tab. Now this is all the conditions or all the elements on an employee. So the first one, asylum seeker. Remember, an employee to be qualifying should either have an ID number or SA ID number, or should have an asylum seeker permit. So if this is ticked, he would be a qualifying employee. You can enter the permit number, related to employer. If it's a connected employee to the employer, then this field should be ticked and the employee would be excluded from the incentive calculation. The same with domestic worker, because they excluded. You can see all the individual detail, the ID number, the actual ETI age. So this would be the age in the calendar month. Then next, in the next field, special economic zone. Now remember again, Once the special economic zones are promulgated in a gazette, we will let you know, and then you can go and select or set up these economic zones. But for now, none is applicable. Minimum monthly wage, you have to go and link each of your employees to the applicable minimum wage so that the system can do the comparison between the actual wage and the minimum wage to determine whether the employee should qualify. Sick code. Now, this is the standard industrial classification code again. Irrespective of whether you implement ETI or you have employees who qualify for ETI, you have to select a sick code for each and every individual. This is a requirement for our tax sharing procedures and not only for ETI purposes. So please make sure that you update each and every employee's screen with the sick code. The next field, period, excluding current months, this is just the number of incentive periods that you've been employed for. Now your system is set up to calculate these incentive amounts. We've set up our basic company information screen, we've set up our minimum wages for the comparison, and you've made sure that the employee's ETI screen is updated. The system will now calculate these incentive amounts. Remember that the system will not automatically deduct your incentive amount from your total EMP 201 pay-as-you-earn liability. The reason for that is, if I'm not tax compliant, again, if I have outstanding tax returns or I have any outstanding tax debts to SARS, then we should not calculate or claim the incentive. You have to decide whether you're going to claim it on the actual EMP 201 or not, as we don't know whether there's outstanding tax returns or not. So make sure that you take the incentive amount that we reflect separately on the EMP 201 and go and enter it next to your pay-as-you-earn amount on e-filing to actually claim that incentive amount. Also note that you have to keep track of all the amounts that you didn't claim. For example, if my pay-as-you-earn liability this month was 5,000 Rand, but my incentive amount was 7,000 Rand. Now, we can't go into a negative pay-as-you-earn amount. So you can still claim your 5,000 Rand, but the 2,000 Rand is then just carried over to the next period. So you can, on the next month's EMP 201, you can claim the current month's incentive amount, including that 2,000 Rand that you carried over. So keep track of it, as the payroll system will not keep track of the rolled over amounts. What is the difference between wage used for ETI purposes and remuneration for ETI purposes? The definition of wage in the Basic Conditions of Employment Act is the amount of money paid to the employee for ordinary hours of work. This would typically your basic salary or your basic wage. In a cost to company setup or a package structure, as you all know it, it would be your cash component, and if you have an allowance that forms part of the package that is for ordinary hours of work, that would also form part of wage. Now, the reason why the system would look at wage is to determine whether the employee actually earns at least the minimum wage according to the bargaining council agreement, collective agreement, or sectoral determination. Once the system compared your actual wage to your minimum wage as set up on the system will determine whether you're a qualifying employee or not. Once you're a qualifying employee, the system will then use your remuneration, meaning your forced schedule remuneration, which is all your taxable remuneration on the payroll. This would be your taxable earnings, your taxable perks, and your taxable company contributions, as remuneration is used to calculate the actual incentive amount. So just to recap, our wage is just to use as to compare whether we earn actual minimum wage or not. So to determine whether this is a qualifying employee. If it is a qualifying employee, the remuneration will be used to calculate the incentive amount. Now again, remuneration can include your bonuses, your commission, your overtime, anything that is taxable on the payroll. Taxable earnings, taxable perks, taxable company contributions. For more information, please make sure to read your release notes. You can also visit our website, our customer zone. There you'll find a frequently asked questions document, or contact SARS.